Today, we're on the ground at the State of Crypto Summit in New York City. Also, Terraform Labs and Do Kwon reach a multi-billion-dollar civil settlement with the SEC. And Grayscale's managing director of research weighs in on what the Fed's decision to hold rates steady means for crypto. Welcome to CNBC's Crypto World. I'm Tanea McKeel at the Coinbase State of Crypto Summit in Lower Manhattan. We'll have more from this conference in just a bit, but first, let's take a look at the markets. Crypto prices are in the red this morning after the Federal Reserve kept its key interest rate unchanged and signaled that just one cut is expected before the end of the year. As of noon Eastern, Bitcoin dropped nearly 5% to the $66,000 level. Ether also fell about 5%, dropping to the $3,400 level, and Solana sank more than 7.5% to around $147. Taking a look at some crypto-focused stocks, MicroStrategy is down 6% as of around noon after the company proposed a private offering of $500 million of convertible senior notes. It said it plans to use the net proceeds from the sale to acquire more Bitcoin as well as for general corporate purposes. This is a routine part of MicroStrategy's aggressive Bitcoin buying strategy that it's employed since 2020. Now back here at the conference, regulation, politics, and of course ETFs are some of the topics in focus, as well as what's next for institutional investors. We've been covering the response by financial advisors to the Bitcoin ETFs since their launch in January. Samara Cohen, BlackRock's chief investment officer of ETFs and index investments, was on stage today. She said advisors are still wary, but that's okay. She said they're having a moment of learning, doing due diligence on how this young asset fits into a portfolio, that that's an advisor's job, and that the journey we're on right now is, quote, exactly the one we're supposed to be on. She also talked about ETFs being a bridge between crypto and traditional finance, and in that same theme, the evolution of tokenized funds. Executives from Coinbase are here, of course, as well as Franklin Templeton, PayPal, and Google. Just moments ago, we heard from both Coinbase CEO Brian Armstrong and ARK Invest CEO Cathie Wood. We're going to hear about crypto on Capitol Hill, the future of stablecoins, and mainstream use cases. You can check out CNBC.com for more of our reporting on this event in the coming days. Now this afternoon, CNBC's Kate Rooney sat down with Matt Hogan, Bitwise Asset Management's chief investment officer, at this conference. He weighed in on sentiment at the event from Wall Street.
I think they're increasingly engaged. This is the era where crypto goes mainstream. You can see that in the approval of spot Bitcoin ETFs. You can see that in firms like BlackRock entering the space. People like the state of Wisconsin allocating $100 million to Bitcoin ETFs. So it's warming. They're not all the way there. They're still finishing their due diligence. I think we'll see an acceleration of ETF flows in the second half of the year as they complete that. But you can see by the crowd here, I mean, the room is packed. People are standing in the back. So there is huge interest from Wall Street.
You'll be able to check out more of Kate's conversation with Matt Hogan in tomorrow's Crypto World show. Okay, let's talk about the top stories. Today, we are getting some idea as to when spot Ether ETFs could be available here in the US. In a budget hearing this morning, SEC Chair Gensler told senators that he thinks the final approvals for these ETFs should be finished sometime over the course of this summer. Gensler also said the process has been going smoothly following the initial approval of filings from stock exchanges related to these products. He added that individual issuers are still working through the registration process. On May 23rd, the SEC approved a rule change that would pave the way for ETFs that buy and hold Ether. Specifically, the SEC approved VanEck's 19B4 filing for a spot Ether ETF, along with 7 others, including BlackRock and Fidelity. But the SEC still needs to greenlight each ETF's S1 filing to begin trading. The Ether ETF development came less than 6 months after the SEC approved spot Bitcoin ETFs, which have proven to be a big success for the industry. Next, sticking with the SEC, the agency reached a more than $4 billion civil settlement with Terraform Labs and its co-founder Do Kwon. The development comes after the now bankrupt company and Do Kwon were found liable by a jury for defrauding crypto investors who lost an estimated $40 billion when the Terra USD and Luna tokens collapsed back in 2022. This proposed final judgment was filed yesterday in Manhattan federal court and notes that Terraform Labs and its former CEO have agreed to pay the SEC a combined more than $4.5 billion in disgorgement, prejudgment interest, and civil penalties. On top of that, the agreement would ban Do Kwon and Terraform Labs from engaging in crypto transactions. It would also prohibit Kwon from serving as an officer or director of any public company. In the court filing, the SEC said that the entry of this judgment would ensure the maximal return of funds to harmed investors and put Terraform out of business for good. The settlement must still be approved by the judge overseeing the case. All right, back to markets for our main story. After the Fed announced its decision to hold its benchmark interest rate steady, I spoke with Grayscale's head of research, Zach Pandl, about what the move means for crypto and what we can expect in the months to come. The Fed holding rates steady and projecting one rate cut this year. So looking beyond the short term, how do you expect that, coupled with the cool May CPI that we also saw this week, to weigh on the price of Bitcoin over the next few weeks, and why?
Yeah, this year has been a big debate about, will the Fed cut rates? When will they cut rates? While we didn't get a very clear-cut answer from Jay Powell this week, I think it is clear that they are on track to reduce rates, probably late this year, maybe the beginning part of next year. U.S. inflation is trending down. It's been trending down for quite some time, and we're getting further confirmation of that in the data. A quite cool core CPI print this week. Other central banks, like the European Central Bank, the Bank of Canada, the Fed's peers, have begun to cut rates. I think Fed rate cuts are just a matter of time. When the committee has full confidence that they can begin that process, they will get started. I think that's coming relatively soon. Bitcoin is a alternative money system, and it competes with the dollar, just like physical gold competes with the dollar. So Fed rate cuts should be a negative thing for the dollar and probably a positive for assets like Bitcoin.
What about for Bitcoin ETFs? So we're always looking at the way the CPI and the Fed decision weighs on the price of Bitcoin. Are your expectations different at all for, what the potential impact of the decision and the inflation data would mean for the flows, the Bitcoin ETF flows versus the price of Bitcoin itself?
Bitcoin is a major macro asset now, and traders that are moving around between currencies, bonds, equities, and commodities like Bitcoin are going to take into account these types of decisions. We could see that have some short-run effects on the Bitcoin ETF flows. Stepping back, though, I think what we are seeing is a second wave of demand for these products. We saw very large net inflows into the spot Bitcoin ETFs after they launched in January of this year. And that was probably investors that were eager to see these products come to the market and ready to buy essentially as soon as they were listed. For many other types of investors, many other types of institutions, these products will require a due diligence process and a fair amount of consideration for how these assets will fit into their portfolios. And then they can be onboarded, then they can be incorporated into individual investor portfolios. I think that's what we are seeing today, that sort of second wave of demand for the Bitcoin ETF products, as more and more firms have gotten comfortable with both the asset and the asset in this particular product structure. I think that is a very positive sign for where Bitcoin can head over the coming months and quarters. Now, other fundamentals are always going to matter. The outlook for Fed policy, the state of the U.S. economy, the election, potentially these are going to drive Bitcoin's price. But that steady inflow into the spot Bitcoin ETFs is a positive technical for the market, and something that I think skews the balance of risk towards higher prices rather than lower prices over the medium term.
With these ETFs and with new investors coming in, I think there are still a lot of investors still kind of deliberating on what exactly this asset is. And some are very comfortable saying, it is likely that it's going to be part of our portfolios one day, so I want to get in on it now. And some people are still kind of stumbling and saying, I want to understand exactly what this is. We've had this debate over the last few years. We will continue to over whether it's more of a store of value or a risk asset. So looking at the data this week and the decision, how big of a driver is that on Bitcoin prices at this point in time, given other catalysts in the market and other trends? We've talked so much about the Fed decision and the potential rate cuts. So how much does that weigh on Bitcoin price at this moment?
The macroeconomic factors are the primary driver of Bitcoin's price, at least over the shorter run. Bitcoin is a macro asset. It is an alternative money system that competes with the dollar. In the U.S. economy, we don't have a choice over what currency we use. We use the dollar for store of value and for payments. But in international markets, investors and companies, importers, exporters, have a choice in what types of currency they use. Bitcoin competes in that market. It competes with the dollar, the euro, the yen, and physical gold as a store of value and potentially as a means of payment. And so these are the primary drivers of Bitcoin's price today. Many investors will always, I think, have some hard time diversifying away from just U.S. dollar-based investments. Many investors just hold U.S. assets and don't diversify overseas into different currencies or into physical gold. So maybe we will always see that. We think it's a good idea to diversify a portfolio. We think the crypto asset class is an excellent diversification tool, and especially useful as other diversification strategies have failed to work in recent years. But sometimes it's an uphill battle with certain investors. I think now that we have the ETFs, many more investors are taking a look at the statistical properties of this asset class, thinking of how it can fit in a portfolio context, and making the decision that it makes sense to allocate some part of portfolio to Bitcoin.
When does Bitcoin retest its all-time highs from March, and what gets us there?
Well, I can't give you an exact date, of course, but I do think that we are on track to retest the all-time high. Probably sometime this summer would be a broad guess. What is that going to take? I think more of what we've been seeing to date. And the three big trends are, first, a Federal Reserve that is interested in lowering interest rates because inflation is coming down. Second, steady demand for the spot Bitcoin ETF products. And third is more favorable political trends for the asset class that may include additional regulatory approvals over the course of this year. I think all three of those things are driving the asset class forward. I don't see any major change in those trends today. So I do think that we can retest the all-time highs sometime over the course of this summer. How fast we get there is going to depend on some of the specifics. But we're in a bull market for crypto. I see no reason why that should change for the short term. And testing and taking out the all-time highs relatively soon is possible.
Okay, that's all for today from the State of Crypto Summit. We'll be back again tomorrow with more content from this crypto conference, and we'll see you then.